because we're getting into new territory. We're pushing toward 50. The market's acting stronger than many believed it could or would. And we're seeing pressures like you just mentioned, the SLV, the retail market outside of the United States, and something is definitely going on in the silver market. So moving on from there, what if we're in a situation where the demand for silver blocks physically, supersedes or overrides the paper market, where I don't care how much you short, give me the silver, put up or shut up. The market is signaling a crisis ahead. A big one, a small one, a little one, a one-day event, a one-week event, and come back to quote-unquote normal? I don't know. But if we get into that panic mode, then all bets are off. That's when we will go parabolic or double parabolic.
You're watching CapitalCosm. My name is Danny. It is October 6th, 2025, and my goodness, we sure do have a lot to talk about today, especially in gold and in silver. And I can't think of a better person to have on today, especially than David Morgan from the Morgan Report. David, thank you so much for coming on, my friend.
Danny, it's great to be back. Thank you.
Yep. Let's go ahead and dive right in here, David. Let's kick it off with silver. Silver's been making the rounds today. Let's go ahead and pull up a silver chart and get your thoughts on some of this recent price action. So we are currently sitting at $48.42 on the futures market. But what's interesting is that if you look at the spot market, it's actually higher. You've got spot silver at 48.64. So what does that even mean? What does that mean when the spot price begins to overtake the futures price? And what do you think are some of the big takeaways from this recent rise in silver? Are we bound to correct back down? Or is there simply more to the story? Could silver surprise us all?
Well, there's a term for it, and it's called backwardation. And what it means is exactly what you said. Backwardation means that there's the spot price, what I can pay for today to get the product, be it wheat, rice, soybean oil, or silver, is higher than something in the future. Now, just to belabor this slightly, Danny, because I don't know the level of all of our viewers, but the futures markets in all aspects go in what's called contango, which is the price today is lower than the price in the future. And the future price is usually determined by the interest rate on the 10-year note, 10-year bond, for example. So if you've got a yield of, and this is a rule of thumb, but generally, if you're going to buy something in the future, it's going to cost you more than it costs today. If it costs more today, that backwardation means that I've got to have it. I am willing to pay up. I'm willing to pay beyond, a future price to have it today.
Wow.
So it means there's a strong, immediate demand. Buyers urgently need the physical commodity, be it oil, metals, or grains, now, not later. It does indicate supply tightness. Inventories are low, and it's hard to get delivery in the near term. And then there's fear that comes into it, fear of a shortage. Traders that on this end may worry about running out of supply. So maybe there's someone out there that didn't stockpile enough silver for their solar panel demand, and they got a delivery coming up, and they're not going to get it. Implication for the precious metals is it suggests that buyers doubt whether they can get real metal later. And this happens. I'm not trying to make a case of, oh my goodness, it's happened several times in the past. It usually lasts a few days. And then the market goes back into contango, which is the normal, costs more in the future than it does today. However, persistent backwardation. So let's say it goes like a week straight. That would be very unusual, Danny. That would indicate a distrust in the paper contracts. They're not trusting the COMEX. They're not trusting the LBMA. They're not trusting their counterparty that has it stored in a brokerage account. I don't want my metal. I don't want it now. So practical meaning for investors, for a futures trader, backwardation means that you can sometimes profit by rolling the contract selling the expiring contract higher and buying the next month cheaper. And that happens all the time. And that's why it usually goes back into tango. So basically, oh, wait a minute, my car could get me, 8,000 today, and I can buy it 2 months from now for 7,000. I'm in, baby. Hey, sell the car, man. I've already got it locked up for $1,000 profit. And that does take place. Yes, even in the silver market. However, having said all of that, Danny, and I'll finish here, is that what if you get a piece of paper that says I'll give you that car for 7,000, and then you go to collect. Oh, I'm sorry. I misquoted my inventory. I don't have that car. What happens then? So that's hopefully a good explanation of backwardation and what it means and what it could mean.
And you're starting to see these reports come out from Japan and China and Canada and Australia and the UK and even some US bullion sites saying that they are running into shortages with silver. I mean, I just checked today with some of these bullion companies, and everything is pretty much out of stock. I mean, for almost everything. So, is that another? Is this confluence of evidence? You have the backwardization happening between the spot and futures price. You look at all these bullion sites, and they're all pretty much out of stock of 99% of their silver products. Are they? Is that a signal that's being sent?
Be very careful with this answer, Danny. And so there's two things. The first thing is, what is the silver market? The silver market is a derivatives market. It's a futures-based contractual obligation where you buy a piece of paper that promises to deliver silver on a certain date at a certain price. But there's much more paper silver than there is physical silver. But it's driven off of that. That's what sets the price. And when that functions, and it's functioned well most of the time up until now, with a few cases of backwardations, a few cases of, I wouldn't say failure to deliver, but late deliveries.
Mm.
But then there's the other side that you're talking about. That's the retail side of the silver market. That is part of the silver market, no doubt. However, it isn't the driver in the silver market per se, meaning that you can have a retail shortage. I mean, there's some well-known dealers out there that are talking about how hard it was to source silver, like you're indicating right now. But that's silver retail, 100-ounce bars, kilo bars, 1-ounce wafers, 10-ounce wafers, government minted coins, silver rounds, silver medallions, all the retail product. And I'm going to elaborate on that in a second. But the real silver market is the 1,000-ounce bars. Right now, the backwardation says 1,000-ounce bars are hard to get. They're very hard to get. I'm going to pay more for it now than I am tomorrow. And that could and most likely be temporary. But is it a temporary 1 day or is it temporary 5 days? In the meantime, you're seeing a demand on the retail side where the public's coming into the market and says, hey, I want silver. And what's interesting about what you said, and I'm thinking it through for our viewers, is it's really the outliers. It's the Japan's, it's the Australia. I don't know all the sites that you're referring to, but it's not the U.S. market. So what it's saying is the world is waking up to the silver story in a pretty big way. But the problem is that there's so little retail silver sold in Asia, in Europe, in many other countries, because in almost all cases, there's a tremendous VAT, value added tax. So a precious metals head says, well, I want to buy some silver. And they walk into the coin dealer and they say, I want to buy silver today. And they say, oh, that's fine. It's spot price is $50 and we have a 17% VAT. So add 20, so you got $10 on there. So it's $60. And then I have a $3 for the coin itself, so it's $63. Well, wait a minute. What happens if I sell it back to you? Oh, I'll pay you $50. So I'm paying $13 to take this out. So don't bother. Well, what about gold? Oh, gold. There's no VAT on gold. Gold is $3,900. Pay me $3,900 or 30. There'll be a markup for the coin. $3,950, $3,960, $60 on a $3,900 investment. It's a pretty low premium. It's not 17 to 20%. So that has dissuaded silver purchases in the physical realm across the world. I'm exaggerating slightly, but not by much. Now, come back to the United States, which is the North America, which is the biggest retail silver market by far. We're not seeing that. Not here, not yet. There may be a few cases with smaller shops or pawn shops. I mean, there's some one-offs here and there, but as far as these big mainstream dealers like Miles Franklin, goldsilver.com, SD Bullion, I could go on and on with some of the wholesalers, Dylan Gage, coins and things. I mean, there's a lot of silver out there in the retail market. Not saying anything he said's wrong. What he said is absolutely correct. I think it indicates one or two things, and I want you to add on to it, Danny. What I said earlier. It appears to me that the world has caught the silver story, and they're maybe late to the party, but not so late that it's that they're not going to profit, and especially once we get over 50. So I think it's like, oh my goodness, I've given up on silver, or whatever, because they're willing to pay that premium. It's like, I want in. My currency's failing, the world's going to hell in a handbasket, whatever their motivation is. Okay. It made up that 17% premium in about, 7 days of trading. I'm not that worried about it. Give me the silver, I'll pay the premium.
Yeah, and at the same time, today we're hearing news that there's this added borrowing fee to short SLV shares, jumping from 2.5% to now 8.5%, and less than 10,000 shares available to short as of right now. So, I mean, this can only mean volatility rising in the options market. What do you make of this recent development in SLV as well?
Well, it's very interesting. We step back, what is it, a couple months or so, and we look at, the Saudis coming in and buying almost 1 million shares of SLV. And that's a pittance relative to their liquid capital, but yet it's enough to, raise some eyebrows and ask the question, are, sovereign nations coming in the silver market? And the answer is yes, in a very light way. But the more important part of that is they are big enough of a purchaser to be able to demand physical silver, which, if you think about it, could put some heat on the silver shorts, because now you've got a nation state that owns part of the SLV and they say, hey, here's your shares back. I want to cash it in for real silver. So that's a bit of I'll call it a threat. At least it's a bit of something that would make them think about it. So now what you do is, well, you short the heck out of the stock, the SLV, and you get ready to move the commodity down. And how do you do that? Well, that's pretty simple. It's been done again and again and again. And that is, you keep selling more silver on paper that doesn't exist until you get pressure to move the price down. But if that doesn't work or isn't working as well as it normally does, you raise the margin requirements. So now if you've got to put up 10%, you raise them up and you got to put up 15%. And if that doesn't work, you raise it again to where you got to put up 20% of them. And if that doesn't work, you raise it to you got to put up 30%. And if that doesn't work, you put it up to 40%. So you keep taking out the little guy, especially, and even some of the trading funds that say, I'm out because I can't put up that much cash, or I don't want to. I'm going to take a profit here. So it adds to the selling pressure. So that's what I expect to see here shortly, is that there's more margin, requirement going in. And what could happen, and I want to emphasize the word could, not would, because we're getting into new territory. We're pushing toward 50. The market's acting stronger than many believed it could or would. And we're seeing pressures like you just mentioned, the SLV, the retail market outside of the United States, and something is definitely going on in the silver market. So moving on from there, what if we're in a situation where the demand for silver blocks physically, supersedes or overrides the paper market? Where I don't care how much you short, give me the silver, put up or shut up. I need it and I need it now, and I'm paying a premium for it. Give it to me. We have a delay. And I'm not saying that's what's happening, but it's acting as if something like that is taking place. I don't want to be overly enthusiastic here. I want to try to remain objective and level headed. But the facts are, as you outlined them so eloquently, we got backwardation, we got retail purchases, we got people shorting the SLV shares and they can't short anymore. What happens when you sell, and it doesn't take the price down? Well, that's kind of what they're doing in the SLV. They're selling as much as they possibly can, and the price is going up. That's a head scratcher. It always worked before. Why isn't it working now?
Hey guys, quick pause from the podcast, but this is something I feel is really important to let you in on. Back in 2020, before I even started this channel, I was looking for an edge, a way to find the big opportunities most investors never even hear about. That's when I found Capitalist Exploits Insider. From day one, it felt like I suddenly had my own team of world-class market pros working for me, digging up trades all over the world, doing the deep research, and handing me ideas that had massive asymmetric upside. Stuff that I would never even think about. Since then, my gains with them have blown past the S&P and the NASDAQ, and it's honestly the single best newsletter I've ever subscribed to. And that's not me blowing smoke. That's for real. I've interviewed their publisher, Chris McIntosh, more times than I can count. In fact, my latest conversation with him is linked in the description box down below if you want to check that out, as well as a pinned comment. And every time, I'm reminded why I've stayed a member for years. Right now, they're offering a special $1,000 discount on the Insider subscription, but it's only for CapitalCosm viewers, so you're only going to get it by clicking the link down below in the description box or the pinned comment. You're not going to find this anywhere else. Click the link, lock it in, and start getting the same game-changing research I've been using since 2020. And so it begs the question, and you may have already answered this earlier on, but here's a quick chart to look at, and this is from X here. This is from Oliver Grob, but this is a chart looking at the nominal price of silver in gold here, as you can see, and then you've got the real inflation-adjusted price of silver. And from where we're at today versus where we were at the high in 1979, it looks like we're still early. The question I pose to you is, if someone doesn't have any exposure to silver, or, I mean, I'm sure everyone who watches my videos has exposure to silver,
Right.
right? So is it still early to accumulate, or are we in the FOMO phase of silver where things just go parabolic, or have we stretched out a little too much? Have we run up a little too far, too fast?
Yeah, it's a great question. I wish I had an absolute answer. I don't have a feeling, but if there's, I'm not trying to brag here. It's just a fact. I mean, there aren't too many people sitting in my position that have been around or in this market for decades, and I have. And you kind of get a sense of where the market is or where it's going. It feels as if it's a little ahead of itself. But Alan Hibbert and Mike Maloney did an update. They do several. They do maybe one a day. I don't know. I don't watch them all, but they did one on why it's different this time. And Alan showed how many days above 40 silver has traded in the past. I don't remember the exact numbers, but I think in the 80s it was like 7 times, and then in 2011 it was like 17 times. And if I remember correctly, this time it's at like 20 already. So that's what you want to see for a strong market. You want to see that 40 handle isn't a 1 day or 1 hour event like the $50 mark was in 1980. Yeah, it hit 50, but it was not there sustainable. But now we've sustained 40 longer than we ever have in the past. So the long answer is we are where we are. We may just blow through 50 and keep on going, which would be extremely detrimental to the shorts right now because they're betting with they're short in the SLV, what they're doing. The committed traders looks favorable to them, but not at an extreme. And they're doing whatever they can with this margin thing that they've only upped once. I wouldn't be surprised to see margins go up today to get control. If that were to go the other way, as I outlined, then there could be someone leaving the fold and saying, I'm going to buy back my short. I can't take the pain any longer. That is very, very rare, but it could happen. So if one of the four major bullion banks that historically have huge short positions decides to bail and say, I can't take it anymore, I'm going to buy it back. Well, that's buying pressure, not selling pressure. Take the price even. So the answer is, I don't know. My gut feel is that it's going to go a little higher, maybe hit that 50, 52, 53. I don't know. And then all of a sudden they win and they do enough with margin requirements to bring the market back down. I mean, I'm doing that based on probability. Every time you've seen a market do a runaway, like Palladium did in the early 2000s, they upped the margin requirements to got to be where you had to have cash only for a margin account. So, in other words, if silver is a 5,000 ounce contract and it's at $50, what is that? 50 times 5,000, 250 grand. Is that right? Do the math right. Anyway, so instead of putting up 10% or putting up 25,000, you got to put up the full amount. You got to put up the full 250K. Well, that's a cash market. So they're forcing the futures market into a cash market. They did that in Palladium. And guess what? It wasn't enough. They actually got it above that. So I actually had 4 contracts on in Palladium when that took off. And I forget where I bought, but it's like, 200. I have to look. But it was 200, went to 300. And my broker called me and said, you got to put more margin in. More margin. Are you kidding? I wanted to buy more. I was thinking, I'm forward a low base. I could add 1 or 2 very conservatively with all the extra cash in my account. It was, oh, no. It doesn't matter. You're winning. You already got all this extra cash in your futures account. The margin requirements are going up across the board, long or short. And I learned that one the hard way. That was, like I said, in the early 2000s. I've been trading futures for quite some time and didn't know that. But that's what can happen. So all I'm saying is caution is here, especially if you're on leverage. If it were me and I was holding any contracts, 110 or 100, I'd be lightening up or getting out for now, taking the cash profits, taking that cash and turning it into physical silver and standing by and wait for a while. Now, if it goes to 60, then having said that to you, I'll get a lot of hate mail. But, being in this game for a long time, it's always good to sell in the strength. Because once you start getting that point where the market does reverse, that's hard to sell. Now you're selling into a lot of sells, which begets more selling. So where are we going? I'll say it again. I'm not sure, but it certainly is acting like it wants to go higher from everything we've talked about from the initiation of our interview.
Yeah, and it appears that if they did want to, I mean, if they did want to keep it under control, it would have been kept under control by now. The price that is.
I think that's good feel of the market. I agree. That's how it feels because normally where they've been and what's always worked, I mean, it's called going to the well. I don't know if you know that expression, but you go to
Mhm.
do what always works so many times and then you go back to the well and it doesn't work. And that's a shock. Now you don't know what to do. Wait a minute. This is my last resort. Always happens, always works. And it's not. Now they get a little bit panicked. And that's why you could get in a position where one of these bankers says, you know what, I'm getting out, man. We are eating it big time. We shorted at 42. We added more shorts at 44. We creamed it at 46, and now we're pushing through 50. I can't take the pain anymore. I'm not saying that will happen, but it could happen.
Yeah, definitely. So with silver having run up as much as it has, does it make more sense to? Well, I don't know if it makes more sense, but if you wanted to capture the upside in the move, would it make more sense to look into the mining stocks in this case? And if so, what is some of the torque that one can expect from the silver miners at
Yeah,
this point?
absolutely. And it may sound like I'm selling my own book, and we do more than silver stocks. We do resource companies, but right now we're focusing on silver and gold more than anything else. Our uranium picks have done well. Our lithium pick has been horrible. But anyway, back on point. I was thinking about that before I came in to do, our chat here, and I thought, the simplest, easiest, best way to catch up with people that bought silver at 30, 35 is to buy the mining stocks. And why is that? It's because there's a delay. It's like getting a look into the future,
Mm-hmm.
um, and you have a crystal ball because most of these stocks are priced as if silver's still at 30. and yet silver's at 48 or whatever. And so there's a delay between the stock price of a good silver company and the futures earnings, which we already know ahead of time. Now, we don't know a quarter from now if silver is going to be priced at 48, 58, or 38. But what we do know is the stock's selling for 30, and it's going to be somewhere probably in that range. So the earnings are going to be far higher than what the stock is indicating now. So it's an almost guarantee. I'm not allowed to say guarantee, and there is no guarantee that by buying, if you want to buy silver at 30, 35, buy the underlying shares. It's that simple. I think I said this on your program. If not, if I did, cut me off, but I made a big mistake in the 80s because I got out of gold at a pretty high price, but I sold my miners at the same time or nearly the same
Mm.
time. And I kicked myself because 6 months later, these gold stocks keep going up and up and up and up. And I go, what's wrong? Well, duh. What happened was gold went from 850, but it settled around, if I remember right, around 600. Well, a year earlier, gold price was 300. So what were the earnings to the bottom line of those gold companies? They're phenomenal. They were just really, really high. So stocks are supposed to move on earnings. I mean, when you buy a stock, you're buying a company. You buy a company to make money. What are the earnings? Are the earnings getting better or worse? They're getting better, the company's more valuable. It's that simple. So the gold stock kept going up and up. And man, what a mistake. I don't plan on making that mistake this time. However, there's more dynamics to it than back then because of the trust of the paper markets altogether. So there's another part of the equation. I want to go there right now. You can ask me, but anyway, that is the answer. And you want to be a little bit careful. There will be a time when the juniors really accelerate. I know a lot of them have done well. Some are on my list. I took one off the list a while back. One of my members called me and said, "Man, I'm so happy that stock's up 500%." I said, "Yeah, because and they are. I mean, some are, some aren't. But anyway, that's the answer. I stress to do it very consciously. You want big money in big companies. You still want, small bets on these smaller companies, and you want to use, you want to, you don't want to get lost in the FOMO. You want to do it judiciously, but that's the way to do it.
Yeah, I'm pulling up a chart here of silver SIL, so Silver Stocks ETF, and I've priced it relative to the silver metal itself. And this is over the last year. You can see the price action since then. We've gone up quite a bit. It's pretty much outperformed the metal by 40 or some odd, 40, 50 some odd percentage. But now you look at some of the most recent price action since mid-September, it looks like it's been going down in this downward consolidating pattern. I mean, this looks like a bullish
It's a
setup
bull
here.
flag,
Yeah, it's a
absolutely.
bull flag for sure. I mean, SIL relative to the metal. So, I mean, that could be a sign there. No guarantees, like you said. But I want to move over to gold here. Gold is, out of all the precious metals between gold, silver, platinum, gold is up the highest today. Gold is up 1.76%. And as you can see here on the futures price, just $23 shy of that special $4,000 price tag.
Yeah.
No backwardation though in the case of gold. Spot price is about $20 cheaper. But give us your prognosis on gold while we have the chart up.
Well, I've been saying it for a long time, and the run to gold began, whatever it's now been, months, several months, and breaking out at the 2000 level was pretty much a guarantee that gold had changed. Changed what? Gold doesn't change. The perception around gold changes, and the perception was that the market at large, with the central bankers being first in or the smartest money, said gold is money and we need more of it. We don't trust the stuff that we call money. And so that move from 2000 to 4000 is based upon an adjustment of perception. We're
Hmm.
perceiving gold as a safe haven or tradition or a pet rock or a shiny substance or all this negative connotations around gold. The market has proven beyond a shadow of a doubt that gold is the ultimate money, and we have to examine it from a psychological level. and that is, what is the demand for money? And the demand is infinite. I mean, if you take all of the quote unquote money that's in real estate, that's in stocks, it's in bonds, it's in private equity, that's in limited partnerships, that's in mutual funds, that it's in ETFs, it's in options, futures, and all that money that exists wants to go into something that they trust, because the trust in all those other arenas is losing validation. Then you have an infinite demand, basically. So where would that put the price? Well, that's a hypothetical, but it has to do with psychology of markets. And that's what I'm saying. The psychology has changed. Well, what about silver? Well, silver's like, hey, silver acts like gold. It's little brother, it's poor man's gold, whatever, metaphor you want to use, but it's also highly essential with no substitution in almost all cases for a high-tech society. And how much of the world still needs electricity? I mean, anything that's electrical or electronic requires silver. So you've got that demand on top of a ongoing monetary crisis, in quotation marks. It's not at a crisis level yet. It may never get to a crisis level, but the market is signaling a crisis ahead. A big one, a small one, a little one, a 1-day event, a 1-week event. We come back to quote unquote normal. I don't know. But if we get into that panic mode, then all bets are off. That's when we will go parabolic or double parabolic. And I don't want to see that happen. It's extremely hard to call a top when you start going really fast, really quickly. And that was basically how I called the top in 2011. That was going up so quickly. And again, having that experience about selling in the strength. So I said, this is it. I had it's a pretty good call. I'm not saying I'm going to get the next one. So I don't think that will happen, Danny. I think we're going to get a pullback. I think we're going to margin up. I think the exchange is going to do everything in their power to kind of quell the markets. And if it goes for weeks or even a couple months, then we'll probably have another conversation. Morgan doesn't know what he's talking about. Danny misled us. Who knows? And I don't really care. I'm doing the best I can. But a consolidation here would actually be healthy. It would actually help the market out to get a bit of a pause, a bit of a rest. But we just don't know.
All right. Well, that's pretty much all I had in line for us today here, David. Anything else you want to talk about that we didn't get into before we wrap up here?
A little bit, and that's um, my documentary. It is done. I'm going to shoot for the 22nd of October. I'll send you a link. You can forward to your database. But uh, I do want to help others and look at the fear and control that money has over our lives. And I've been an advocate for sound money or honest money for honest people for most of my life. And it's not like the solution, but it's a big help, especially in these trying times. So it's a trustless situation. You don't you trust it because it's always worked. Silver and gold have always worked as money. Their value changes over time, but yet they're always good. There's no there's no counterparty risk. In other words, it's a riskless situation. I'll leave it at that. Good to be back. Thank you.
All right. Where can people find you if they want to see more of your work?
Yeah, the best place is themorganreport.com, but I'm pretty big on X. I'm at SilverGuru22 on X. And just the basic website, themorganreport.com, has icons for every place else: LinkedIn, Facebook, YouTube account, all that.
All right. We'll have the links to both of those down below. So check them out, guys. Dave, thank you so much for coming on, my friend. Always a pleasure having you on, especially during these turbulent times. Guys, if you got value out of this podcast, drop us a like and comment. Go, Dave, go in the comment section. If you agreed or disagreed, let me know either way. I do, in fact, read all the comments. And then finally, subscribe to the channel so you don't miss an episode. And by liking, subscribing, commenting, doing all the YouTube engagement stuff, it does help in boosting this video and this channel in the algorithm. So if you'd like this message out and to get out to more people, then be much appreciated. A little bit does go a long way. May not seem like much, but it does go a long way, and it's free. But if you'd like to support me monetarily, then consider becoming a paid member over at my Substack at capitalcosm.substack.com to get early access, ad-free versions, and uncensored versions of all of my content, as well as the chance to ask my guests questions down the line. So with all that said, appreciate your time, guys. Catch you later. Bye.